Today, crypto is not immune. Hello again, it's Martin North from Digital Finance Analytics. Welcome to this post covering finance and property news with a distinctively Australian flavour. We already covered the recent market falls in our show yesterday, but there wasn't time to cover the market movements in crypto land. Now, I've suggested that Bitcoin, for example, being a pure digital play with no underlying intrinsic value, is more susceptible to volatility in times of uncertainty. So while gold went nowhere as markets fell, Bitcoin shed a fifth of its value on Saturday, thanks to a combination of profit-taking and macroeconomic concerns. This triggered nearly $1 billion worth of selling across cryptocurrencies. And in fact, at one stage, Bitcoin was down 22% to as low as 41,967 during the session, taking total losses for the day to 22%. But it subsequently recovered from that biggest drop in crypto since September the 7th and is sitting at around 49,038. That's a mere 7% down. The broad sell-off in cryptocurrencies also saw Ether, the coin linked to Ethereum blockchain network, plunge more than 10%. Based on cryptocurrency data platform CoinGecko, the market capitalization of the 11,392 coins it tracks dropped nearly 15% to $2.34 trillion. That value had briefly crossed the $3 trillion mark last month when Bitcoin hit a record of $69,000 US. The plunge follows a volatile week for financial markets. Global equities and benchmark US bond yields tumbled on Friday after data showed that US job growth slowed in November and the Omicron variant of the coronavirus kept investors on edge. Justin Dathin, Hong Kong-based head of exchange sales at cryptocurrency exchange Equinix, said he'd been watching the increase in leverage ratios across the cryptocurrency markets and as well how large holders had been moving their coins from wallets to exchanges. The latter is usually a sign of intent to sell. Whales in the crypto space seem to have transferred coins to trading venues to take advantage of a bullish bias and leverage from retail traders to then push prices down, he said. The sell-off also comes ahead of testimony by executives from 8 major cryptocurrency firms, including Coinbase and FTX Trading, before the US House Financial Services Committee on the 8th of December. The hearing marks the first time major players in the crypto markets will testify before US lawmakers as policymakers grapple with the implications of cryptocurrencies and how best to regulate them. In fact, last week, the US Securities and Exchange Committee rejected a second spot Bitcoin exchange-traded fund proposed from WisdomTree. And data from another platform, CoinGlass, showed nearly $1 billion worth of cryptocurrencies were liquidated over the past 24 hours, with the bulk being on digital exchange Bitfinex. If anything, this is the opportunity to buy the dip for many investors who might have previously felt they missed the boat. We can see Tether bought at a premium, suggesting people are getting cash ready within the crypto space to do just that, said Ethereum, referring to the biggest stablecoin in the cryptocurrency world. But of course, others may be less bullish. We always see this polarization between those who are crypto believers and those who aren't. A plunge in Bitcoin funding rates, the cost of holding Bitcoin via perpetual futures, which peaked at 0.06% in October, also showed traders had turned bearish. The funding rate on cryptocurrency trading platform BitMEX fell to a negative 0.18% from levels of around 0.01% for most of November. Bitcoin and its crypto peers remain up, of course, massively on the year, with Bitcoin still up 61% year to date, and is trading above September levels still, but volatility is indeed a feature of crypto traders. The question will be whether this is a typical pullback or whether the general risk-off mentality signals a more enduring sell-off in the crypto ecosystem. Some are drawing parallels between what we're seeing here and the dot-com sell-off in the early thousands. According to data from CoinGlass, positions worth around $2.4 billion have been liquidated in the past 24 hours, with Bitcoin representing about 42% of them. Within minutes, Bitcoin went down by around 7,400, a flash crash that is not that unusual in the volatile world of cryptocurrencies, but is still causing a stir. Over the past 7 days, Bitcoin has seen a drop in value as it lost around 13%. And the volume of Bitcoin traded in the 24 hours is around $58.8 billion, or 26.87% of the total volume of all cryptocurrencies. It's traded in a range of 42,000 to 59,000 in the past 7 days. The analysts at CoinDesk blamed at least some of the downturn on trading in crypto derivatives, amplified by growing concerns about the prospects of tighter financial conditions that is forcing a repricing of assets that are sensitive to potentially rising borrowing costs. The decline was likely in part technically driven, exacerbated by the derivatives market, and not helped by the downside momentum behind high growth stocks on Friday, to which Bitcoin has been positively correlated, wrote Katie Stockton of Fairlead Strategies. NYDIG estimates that $1.1 billion of leveraged Bitcoin positions and $2.5 billion of crypto leveraged positions, including Bitcoin, have been liquidated in the past 24 hours, representing the largest such notional liquidation since September the 7th. As I've said several times, you have to look at the derivatives to understand what's going on with the underlying, just like gold. Bitcoin's values have been softening for weeks, but declines for other risky assets have been accelerating, with the Federal Reserve indicating it might increase the pace at which it is withdrawing the market support provided over the last 18 months during the coronavirus pandemic, as it turns its attention to restraining inflation. This so-called tapering of bond purchases has investors believing that interest rate hikes are next on the central bank's agenda in 2022. So some believe that Bitcoin and other digital assets aren't correlated with the price of other assets, which has been heralded as one of the most appealing features of Bitcoin and its ilk. But crypto has been trading more in step with traditional stocks and bonds recently, partly because of the prevailing low interest rate environment. And if that changes, then the value of a host of assets, also factoring inflation, must be reassessed. Or put another way, the value of an asset is its future income discounted to the present using interest rates, plus a risk premium, the extra return you expect for owning something riskier than a government bond. A rising interest rate diminishes the present value of that future income. Now, in traditional markets, that repricing has seen technology shares underperform, as they are the most sensitive to shift in rates. The tech-laden Nasdaq is 6% from its November 19 peak, with declines gathering steam over the past week amid fears about the economic impact of the coronavirus Omicron variant and the concerns about the Fed's monetary policy plans. Meanwhile, the Dow Jones Industrial Average is halfway towards a correction and is off more than 5% from its November 8 record close. And the S&P 500 is about 3.5% from its all-time high on November the 18th. And the small cap Russell 2000 index fell into correction, commonly defined as a fall at least 10% from a recent peak on Thursday. Now on Twitter, Michael Novogratz, founder and chief executive of crypto firm Galaxy Digital, said that the backdrop in markets was a perfect storm, perhaps referring to the tumble in broader markets, Omicron fears, and hawkish comments from the Federal Reserve. Fairlead Stockton said that if the downturn persists after Bitcoin broke through an area of support at around 53,000, it would qualify as a more troubling technical breakdown of the uptrend in the asset price. Momentum has weakened to the extent that there is a pending weekly sell signal that would be solidified upon a confirmed breakdown tomorrow, they wrote. Referring to the moving average, divergence, convergence, used by technical analysts as a gauge of momentum in an asset. But NYDIG suggests that they are seeing positive trends for Bitcoin and crypto. On the desk, we've seen two-way flows today, with 84% of the flows being buys on our trading desk, excluding tax losses, harvesting trades, the company wrote in a note on Saturday. So to be sure, crypto is one of the more volatile assets, and it's still in the phase of gaining credibility as a bona fide alternative asset, or as I say, depends on your religious proclivities. Some crypto bulls, known for holding the investment long term despite its tendency for wild swings, were making light of the Saturday slump. Well, the point I want to make is this, that we could be seeing here the end game when it comes to the evolution of the current momentum in crypto. And if the main markets continue to go lower, and if interest rates are expected to rise later, then the value equation certainly changes. And I do come back to my fundamental point that with Bitcoin and other digital currencies, there is no underlying asset, but there is an overlay of futures, and those futures will definitely impact the current state of play. The other point I want to make is long-term holders are still doing very well, but those possibly less experienced investors who've been piling in more recently could already see losses on their holdings, and they may well be persuaded to sell into the fall to cut those losses, whereas perhaps long-term holders will be seeing buying opportunities later. This is not over yet, but it does underscore the issue that cryptos are not immune from the current phase of volatility. And if it's driven by nothing other than a sense of unending growth, then they could end up going anywhere. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.